Alex Becker says to sell not based on charts, but on extreme social media euphoria, while Ben Cowan expects a September dip based on historical trends. The Coin Bureau points out serious risks for Ethereum, including competition and regulation, and Crypto Tips dismisses the recent billion-dollar liquidation event as just reckless gamblers getting cleared out. Crypto Rover, who called the dip, is now betting over $10 million on a bounce, citing a CME gap and big buys from BlackRock. Meanwhile, Crypto's Russ covers the shocking news of Trump firing a Fed governor and a whale dumping 36,000 BTC. Lark Davis questions if the traditional 4-year crypto cycle is even still a thing, and the modern investor warns a massive Bitcoin supply shock is coming as institutions drain private reserves, which could send the price sky high. In the latest video from Crypto Rover, the host explains that he predicted the recent Bitcoin dip and has now opened over $10 million in long trades. He discusses his strategy, noting that historical patterns after events like the Jackson Hole speech suggest a pump followed by a correction, which often fools traders before the market bottoms out. He points out that a CME gap has formed on the upside for Bitcoin, which he expects to be filled soon, similar to the last 20 instances. The video also touches on Ethereum, mentioning that it has filled its own gap and is retesting a significant support line. He notes that while September is historically a weak month for both Bitcoin and Ethereum, Q4 is usually strong, and the general expectation of rate cuts should bring more buying pressure. Additionally, he mentions that BlackRock has been accumulating a large amount of Ethereum, with over 2.2 million ETH purchased since May. The video's analysis of a potential Bitcoin bounce seems timely, especially given the recent market turbulence. The crypto market did see a downturn following Jerome Powell's remarks at Jackson Hole, leading to significant liquidations. Currently, Bitcoin is trading around $110,168, showing some volatility. Ethereum is priced at approximately $4,531. The video's mention of BlackRock's Ethereum accumulation is particularly relevant as recent data shows significant inflows into Ethereum ETFs, with BlackRock's fund seeing a $314.9 million daily inflow. This institutional interest could suggest a growing confidence in Ethereum's long-term value. While September has historically been a challenging month for crypto, the anticipation of rate cuts in Q4 could indeed inject fresh capital into the market. However, the market sentiment is currently leaning towards fear, with the Crypto Fear and Greed Index dropping to 43. This indicates that traders are becoming more anxious, which could lead to further price swings. The overall crypto market cap has also seen a recent decrease. In the latest video from the Crypto Tips channel, the host discusses the recent dip in the crypto market, highlighting nearly $1 billion in liquidations over the past 24 hours. He points out that the majority of these were long positions, amounting to $827 million, and dismisses those liquidated as reckless gamblers. The video touches on a liquidation map, suggesting that if Bitcoin's price drops to $18,800, another $1 billion in longs could be wiped out, while a rise to $122,000 could liquidate $15 billion in shorts. The host asserts that we are not at the top of the bull market and advises against panic selling. The video's take on market liquidations and the potential for a future bear market driven by institutional sell-offs is a plausible scenario. The recent market volatility has indeed seen significant liquidations, with over $900 million liquidated in the last 24 hours as Bitcoin briefly fell below $109,000. Currently, Bitcoin is trading around $110,168. The host's skepticism towards the Federal Reserve's independence is amplified by current events, as President Trump has indeed fired Governor Lisa Cook, a move that has raised concerns about political interference in monetary policy. This action has contributed to market uncertainty, with Bitcoin's price dipping to a 7-week low. The discussion of countries potentially moving away from U.S. debt is a long-term narrative, but the recent threat of 200% tariffs on Chinese magnets does add to the perception of trade instability. The crypto market sentiment is currently neutral, suggesting that investors are weighing these macroeconomic factors. While the idea of a generational wealth opportunity in the next bear market is compelling, it's important to note the unpredictable nature of the crypto space, where both institutional adoption and regulatory pressures will continue to be significant factors. In the latest video from Lark Davis, he discusses the current clash in the crypto world between two big ideas, the classic 4-year cycle and a newer, extended cycle theory. He points out that most regular investors, maybe 60 to 80% of them, are still betting on the 4-year cycle. They're basically waiting for one last big pump in the final quarter of the year to sell off their crypto. Davis explains that this mindset comes from a few places. It's what has happened before, it feels predictable, and a lot of people are still shaken up from the last crash and need the cash. The debate between the 4-year and extended cycle theories is more relevant than ever, and Lark Davis makes a strong case for why this time might not just rhyme with the past. The idea of an extended cycle is gaining traction, especially as institutional adoption is no longer a future concept but a present reality. We're seeing public companies now holding over 951,000 Bitcoin, and digital asset treasuries have raised an incredible $15 billion this year alone. This isn't the same market as 2017 or 2021. In the latest video from Ben Cowan's channel, he expects any short-term Bitcoin rallies to be sold off as it heads towards the bull market support band, likely in September. He points to historical data from 2013, 2017, and 2020 showing similar drops in September during post-halving years. Cowan notes that Bitcoin often finds resistance around the $12,400 level, and the recent high was about 10 times that. He doesn't believe the cycle has topped yet, suggesting the current high was an August high similar to 2020. The primary target for a bounce is the 20-week SMA, but he acknowledges it could drop to the 50-week SMA. A couple of weekly closes below the 50-week moving average would signal the end of the current cycle. He also mentions that now that Ethereum has hit a new all-time high, Bitcoin has the green light to pull back. He anticipates a potential 30% drop for Ethereum from its August high to a September low. The overall take is that the local top for Bitcoin is in, and a visit to the bull market support band is expected in the coming weeks. Ben Cowan's analysis leans on historical patterns, particularly the tendency for September to be a corrective month for Bitcoin in post-halving years. This lines up with some current market sentiment that sees seasonal headwinds for Bitcoin. Right now, Bitcoin is trading around $110,000, showing a slight decline over the last 24 hours and the past week. Cowan's idea that Ethereum's new all-time high paves the way for a Bitcoin correction is interesting. Ethereum recently hit a new peak, but has since pulled back to around $4,500. The market is seeing significant inflows into Ethereum-based products, with some analysts suggesting a rotation of interest from Bitcoin to Ethereum. Cowan's key indicator to watch is the 50-week moving average. A break below this could signal a more significant downturn. This is a widely watched level, and a sustained drop below it would likely cause concern in the broader market. The possibility of a Fed rate cut in September could act as a counterforce to this bearish historical trend, potentially injecting new liquidity into the market. In the latest video from the Coin Bureau channel, Nick breaks down the biggest risks facing Ethereum, even as hype and price targets are on the rise. He identifies 5 major areas of concern: competition, regulation, institutional capture, the behavior of digital asset treasury companies, and technical risks within the Ethereum ecosystem itself. The video provides a solid overview of the key challenges facing Ethereum, and recent market developments certainly amplify some of these concerns. The competition from chains like Solana is not just theoretical, it's a daily reality in the transaction speeds and fees users experience. While Ethereum has its loyal developer base, the allure of faster and cheaper alternatives is a constant pressure. In the latest video from Crypto's Russ, the host discusses 2 major topics shaking the crypto space. First, he covers the breaking news that President Trump has fired Fed Governor Lisa Cook over allegations of mortgage fraud. This is presented as a historic move that could threaten the Federal Reserve's independence, with an uncertain impact on the markets. Second, he questions what caused today's market dump, where Bitcoin dropped from around $112,000 to $110,000 after a whale sold 36,000 Bitcoin. Altcoins were hit particularly hard, with ETH and SOL seeing significant drops. The speaker suggests the sell-off was likely due to whale manipulation aimed at clearing out about $750 million in leverage. He notes a rumor that the whale who sold Bitcoin did so to purchase ETH, not to exit the market. Despite the drop, he points to strong underlying activity such as Pantera Capital raising $1.25 billion for a Solana treasury and a new company, SUI Group Holdings, debuting on Nasdaq as a Sway treasury. He concludes by mentioning upcoming macro events like Nvidia's earnings and the PCE inflation report that could bring more volatility. The video touches on significant market-moving events, both real and reported. The news regarding the firing of Fed Governor Lisa Cook is indeed a major development, representing an unprecedented clash between the White House and the Federal Reserve that introduces a new layer of political uncertainty into the markets. This could lead to volatility as investors weigh the possibility of more politically influenced monetary policy. In the latest video from The Modern Investor, the host talks about the increasing number of large-scale Bitcoin purchases by corporations and institutions. A notable example is David Bailey of Nakamoto Incorporated and Bitcoin Inc., who announced a $762 million Bitcoin purchase. The video suggests that these massive and frequent buys are a response to the weakening US dollar. A major point is the rapid depletion of Bitcoin available on over-the-counter OTC desks, which are favored by large buyers to avoid impacting market prices. The host recalls that the supply on these desks has fallen dramatically, from around 700,000 to possibly 250,000 Bitcoin. It's argued that as this supply dries up, these big players will be forced to buy directly from public exchanges. This shift is expected to cause a significant supply shock and dramatic price increases, potentially pushing Bitcoin to as high as $1 million by the end of the year. The host mentions that MicroStrategy alone has purchased a substantial amount of Bitcoin from OTC markets, contributing to this supply squeeze. The video's core argument about a looming Bitcoin supply shock driven by institutional buying and dwindling OTC desk reserves is quite timely. Recent data shows that Bitcoin balances on OTC desks have indeed hit record lows, dropping to around 156,000 Bitcoin. This trend of large-scale accumulation is happening while institutional inflows into Bitcoin ETFs reached a staggering $33.6 billion in the second quarter of 2025. Companies are increasingly adding Bitcoin to their treasuries as a hedge against inflation. For instance, MicroStrategy has continued its aggressive purchasing, recently adding another 3,081 Bitcoin to its holdings. However, the idea of $1 million Bitcoin by year's end seems overly optimistic. While the supply squeeze is a real factor, September has historically been a weak month for Bitcoin's price. Also, some analysts are pointing to institutional saturation, where large purchases no longer cause the same price surge as they once did. The market is currently seeing a mix of bullish long-term indicators and short-term bearish sentiment, with Bitcoin's price recently dipping below $112,000. A more measured price target of around $130,000 to $150,000 by September 2025 has been suggested by some analysts. In the latest video from Alex Becker's channel, he starts by jokingly saying he's selling all his crypto, only to reveal the video is actually a guide on when to sell in the future. He argues that the market top is not here yet, predicting the market will first rebound, pushing Ethereum up and kicking off an altcoin season. He believes 85% of crypto investors will lose money because they won't sell at the right time due to greed and euphoria. The real signs of a market top, according to him, are not based on price charts, which he calls male astrology, but on human behavior. He says to watch for extreme, aggressive bullishness on social media, where anyone posting bearish opinions gets mercilessly attacked. Other indicators include skyrocketing engagement on crypto YouTube channels and celebrities getting involved. He outlines a typical bull run cycle. Bitcoin moves first, then money flows to Ethereum, followed by the top 25 altcoins, then mid-caps like DeFi and infrastructure projects, and finally, low-cap coins in areas like AI and RWA, culminating in a meme coin frenzy. He suggests Ethereum could reach between $6,000 and $8,000, with mid-cap alts doing a 3-5x and low-caps a 10-20x from their current positions. His advice is not to try and time the exact top, but to start selling gradually when these signs of mass euphoria appear, securing profits instead of getting caught in the inevitable crash. Becker's focus on social sentiment as a primary indicator for market tops is a classic contrarian viewpoint that holds weight, especially in a market as emotionally driven as crypto. Looking at the current landscape, we're not seeing the widespread, aggressive euphoria he describes as a sell signal. In fact, the market is showing signs of nervousness. Bitcoin recently dipped below $110,000 after a significant whale sell-off, and the crypto fear and greed index is hovering in the neutral zone, currently at 48, down from greed just a week ago. This suggests caution, not the wild optimism of a market peak. Ethereum also saw a pullback after hitting a new all-time high of around $4,950. While institutional adoption continues to grow, with firms like CEA Industries making large treasury bets and regulatory frameworks becoming clearer in the US and Europe, the retail mania Becker points to is largely absent. The current price action, with Bitcoin struggling to hold support and traders placing significant bearish bets, aligns more with a mid-cycle correction than a final blow-off top. The capital rotation he mentions, from Bitcoin to altcoins, is happening to a degree, but it lacks the explosive, indiscriminate nature of a true alt season fueled by pure mania. Therefore, based on his own framework, the current market conditions would likely be interpreted as a period of consolidation before the next major leg up, rather than the time to be aggressively selling everything.